everybody, and welcome to another edition of the Traders Mind Chat live streaming show. Today, we had a very interesting question pop in, and it was another great question from the people in our StockTwits group. The people that were there were asking, how do you know which way the smart money is moving and which sectors they're getting into and getting out of? And well, when it comes to sector rotation, well, one of the best people that I like to talk to about sector rotation is our very own Stu Chalmers, who is joining us today. Stu, welcome.
Hi, Mike. Hi,
So,
everybody.
Stu and I have similar yet different processes for going about answering this question of which way is the smart money moving and which sectors are the major players getting into and getting out of. So, um, before we get into the nuts and bolts of like, well, what I do and what Stu does, and we kind of have the meeting of the minds. If you guys that are here that are joining us live, if you want to just go ahead and type into the chat, let us know where you're from. What questions that you have for us already, if you have any questions, and also make sure that you hit the like and subscribe button because that's going to help blast this live stream out to a lot more people. Um, but let's why don't I share my screen first, and then we'll take a look at Stu's screen and see uh, the different ways to look at sector rotation. So the way that I look at it first is uh, the first thing that I like to do is to go through a spreadsheet here. And those of you that have joined us and have seen me talk about this a few times, it's I like to do a universe watch list. So run a bunch of screens based off of a set criteria, basically looking for high growth stocks, and then from there see which sectors are expanding, which sectors are contracting, and then each weekend, and really as the week progresses, start to come up with a trade ideas list, and then see which stocks are setting up and which sectors there are in here, and see how those sectors are expanding and contracting. So when you just export it to a list like this, it's real easy to just come over here and then um, sort the list, right? Like so. I'm going to just sort it by column B over here. And then you get a great sense of like, well, there's a lot of banks that were setting up. And apparently several of them that have moved. There's a few building, there's a few small handful of business services, one from chemical, few energy, a lot of finance, right? So when you start to see sectors, like a bunch of sectors moving, or a bunch of sectors setting up, that's one of the things that I like to look for to say, like, oh, like, well, what stocks are in those sectors, right? So, well, what moved so far, right? Well, AFRM was a huge mover yesterday, right? Like, here's AFRM. Ran up to the tune yesterday of about 20%. Not bad for a day's for a day's move. Um, but that's the general idea, to see like what stocks are setting up. Are there many stocks within a given sector that are setting up? And look at this too, like software, uh, many stocks in that group as well. So that's something that if I'm starting to see bullish setups, I'm starting to see constructive patterns, then that's something that's going to clue me into, okay, this is where stocks are starting to get support. So it's not I'm looking at it more from a price action perspective, and then trying to narrow it down. Stu, could you share your process a little bit? And then, because we've spoken so much about this topic, now both on the last live stream that we did together, and also we talked about it quite a bit too in the Discord chat with the elite members. But I'm always learning something new from you, and you have a lot of great insights into how sectors are rotating, and where to kind of cast our fishing line into the pond. So I'll pass it over to you, and put on your screen.
Okay, let me just switch monitors here. So apologies if I seem to be looking the wrong way. There's two particular tools that I use for this sort of thing. My go-to one is stock charts, but that's a paid service. So I'll look at the other one first, which is a free service, which is Finviz. The Finviz site, I think, is quite underrated by a lot of people. I don't know if that's because it's often one of the very first ones that people go on to, or they don't fully understand where all the various functions are within it. It can be a little messy to navigate around, but the key bit that you're looking for within Finviz is this groups section here. Oops. So what's particularly useful about Finviz, and you can see that I'm getting the ads here, so I'm still on the free version of this one. Although I've not actually logged in as myself at the moment. But what you'll get here is the spider groups or sectors, which are based around the ETFs, and what it gives you is 1 day, 1 week, and 1 month performance, and it goes all the way down to relative performances and so on. But this is very useful to kind of keep your eye on. It's updated every single day, and the performance is relative to the other stocks within the group, or the other sectors within the group, I should say. So, if you were looking at this on a daily basis, which I used to look at this on a daily basis, I now tend to glance at this on a more weekly basis. But you can see within this that over this past month, energy has been the top performing sector here, followed closely by finance. And then if you look at that on the weekly chart, those two are still the same, two in the top. So that's where your big money is. It's in these ones here. Money seems to be coming out of industrials on a monthly basis, but it's still holding up pretty well on a weekly. So that may be declining, because these things don't just go up and down like skyscrapers. Money slowly rotates into them, builds up, and then slowly rotates out of other ones. So you see these things move. And if you start tracking them on a day-to-day basis, it kind of gives you an idea of where you are within any cycle. The daily relative performance is useful if you have a whole bunch of say healthcare stocks that you're in, and you all of a sudden see this start to go to decline. I tend to use this as a kind of health gauge, and if I start seeing 2 or 3 red days in a row on a sector that I'm in, I know that money's starting to leave that sector, so time to tighten up those stops, etc. You can drill down into each of the different industries as well from within here. I'll go through that in a wee sec, but you've also got various other types of chart that you can use within this. You get the spectrum, and then if you want to actually look at the individual ETF charts to see what's going on under the hood. A great thing about FizzBiz is the order by. You can order these charts in any column, but really what you want to be looking at them is by either relative volume or change. Change is the one I tend to use, and put that as descending. Oops. So these are the things that are changing the most on that, within within those sectors. And that gives you a fairly good idea of what's happening within that sector, consumer cyclicals. It's kind of peaked there, stabilized across, and it's now drifting down, declining down the way. So it's probably not somewhere we want to put our money in. Now it's had a big jump this week, but you possibly don't want to be looking at that too highly. Basic materials, we can see what's happening there, healthcare, and then when we get to some of the ones further down that we were talking about earlier, energy and finance, we can see why they are doing so well, because broadly these are now at their all-time highs, or we're starting to break out from them. Real estate, which was on a tear earlier on in the summer, it sort of came up from there. That's declining, consumer defensive, and you can kind of dip through them. So if we were looking at, if we go back to here, if we were looking at the financial industry, we can also drill into it through stock charts as well, and we can actually see the different industry groups within that sector. And again, we can look at that, by whatever it is, so if we look at this as performance, where has that gone? For weekly performance, and put it in descending order, so we get the top performers up the top. We can see what's kind of happening here on this weekly basis. And this is possibly mimicking your spreadsheet a little bit, Mike, but it's rather than something to type it in, it's doing it all for us. But we can see this week insurance is up, but over the month it's not up that great. Quarterly, yearly, etc., etc. And you can start to change your sort orders and things to get things where you want to see them. And if you really want to see what's happening in big money, just look down this volume column at the end. So, we can see there's a lot of money going into banks, a lot of shares getting traded in banks and various things. So these are the basic tools that you would use if you don't have any of the more advanced tools that we have. And that's free for everybody, and it's really just about getting familiar with these tools and starting to see, make them your own, if you like, whether it's just using that weekly chart or whatever, but just use the sector chart here, and just start looking at that and see what's actually performing. And once you get the monthly and the weekly lined up, then these things are on a bit of a tear. That's
Yeah,
where.
I think that's great that you to highlight this like a free tool that anybody could use as people start to get their feet wet with this stuff. Now the last thing that you really want to do is like run out, like buy like a ton of different services if you're just starting out and you don't really know that, like that's just a way to get confused and spend a lot of money very very quickly on things that may or may not serve you. And that this is
Yeah, and
uh,
there's a lot of good things that you can do
yeah.
with this too, because you can drill into if we go in the financial industry and we look at this on a performance basis, and we really like the look of diversified banks, or we really like regional banks, and if we click on that, it takes us to a list of the stocks.
Mm.
So now we've got 19 pages of that, but we can then start to filter those down. And we could say, well, we only want to be trading things that are over $20, over $20 down there. And we can then start to really narrow it down, and we want relative volume. Relative volume is how much volume it is traded on any given day, in relation to its average. So if it's over 1, it's trading more than that average volume, and that essentially gives us a narrowed down list here of stocks that maybe we should have a look at. And as you can see, you can highlight the little charts as you go over it. So for free tool, you're not going to get much better than that.
Yeah, no, I don't think so. I I think that it's so interesting that we both kind of arrived at the same answer, uh, using like two completely different methods.
Yeah.
Um, well, why do you think that is? Well, like
Well, because
why might
obviously,
that be?
yeah. So I think that you're looking at it within your own little micro universe, if you like, of stocks that are within your universe and looking for setups within that, um, which is just a microcosm of the market as a whole. So
Mm,
what's happening in the market as a whole should also be happening within your self-contained universe of stocks within that universe. Although they will all have certain characteristics, from the canceling stable, so they'll have, yours will all have canceling characteristics. This set of stocks none of them might have any canceling characteristics. You don't know until you look further. But I'm taking it from a market-wide perspective and having a look at what's going on overall market-wise, and whereas you're starting from that subset of market to see what's happening in there. I'm fairly sure there will be times that they diverge as well, because you will get times when the market is moving into those very defensive stocks and sectors, which probably will not appear in your universe. So the market may well be making a move unbeknownst to you.
mm.
But they wouldn't be stocks that you're trading anyway, so it's not really of any importance, to your particular style.
Right. So for my system, if I'm seeing very few setups, or if I'm seeing low quality setups, then that's a sign for me to stay out. Um,
Yeah, so that's a wise decision. Yeah, that's
learned the hard way many times over, and
yeah.
sometimes it's a lesson that I relearn.
Yeah, it was something I learned from Leif Sereda, is that when things get tough, you climb the quality ladder in terms of your setups and so on, and the stocks that you're picking, you got to go up that quality ladder, not down it,
Mm,
which is a mistake a lot of people make. They start looking for setups or trades that just aren't there. The kind of, the minute Vinny says don't force a trade, and
mhm.
that's what happens when you start to. Um, when you're looking for trades and none of them are there in your main stocks, you start giving things more room, more leeway. You should probably do the exact opposite, and
Yeah, well,
really make them demand a place on your portfolio.
why do you think that is? Well, why should you move up the quality ladder when the market is kind of on shaky legs, and it might be harder to find high quality trades?
Well, if you're in the best stocks in the best sectors, within the best industry groups within those sectors, those are the ones that are most likely to hold up during any choppiness or market correction, because they're the ones that have people that are holding for, some of them long term, some of them medium term, and there'll be also be day traders and swing traders in amongst there as well. They're the ones that will have the people that are most invested in that stock going up, because it is the strongest group, and there's no reason for them to necessarily sell out of those positions. When people are selling or pruning their portfolio, you sell your weakest positions first. So you don't want to be in any of those weak positions when one of the big mutual funds decides it's time to prune its portfolio, and whatever it is, consumer defensives or whatever, let's prune this a bit. They're going to get rid of all the weakest stocks first.
Hmm. So why why would you go for a lower quality stock at any point?
But, well, when the market's in full bull mode that it was last year, I mean, you can pretty much plop. your money down into any stock and it was going to make you money. So what you're looking for there is the thinner stocks, the ones that got more exciting stories. They maybe don't have great fundamentals or a great long-term future, but when things are moving up well, you want to be in those most exciting stocks to maximize the amount that you can make out of that bull run, or even if it's a 3 month or a 6 month bull run. And that's, if you want to hit those 100% winners in 3 and 4 weeks, that you are necessarily looking at that slightly lower end of the market and trying to pick in there. That's kind of where I like to trade and do my fishing.
Yeah, absolutely. There's been a, a number of incredible winners that you've picked out over the past several months. SI, SBO.
You only need a few of them a year, but to make to get you some serious gains in your portfolio, and that's how I tend to do it. But it all comes back to this: what is the best sector to be in? Where what are the best industry groups within that sector? What is attracting the hot money? Then because I my account is not of a size that it moves any kind of markets, so I'm looking to step on their coattails and and ride the lift up with them. So you're trying to look at when they're interested in a sector, and you're trying to get the bulk of that move, because in a lot of stocks that will happen quite quickly. Then you should be exiting more or less when the general populace is now starting to get interested in that name and move into it. You've made your money, you're gone. Move to the next one, which is why I take a keen interest in sectors and industry groups a lot. And I think there was some sort of study, or there's certainly a statistic buzzing around various trading forums on the internet that almost 50%, or some say over 50% of a stock's move can be directly attributed to the industry group and the sector.
Yep.
How true that is, I have no idea. But it does seem to chime with where you have most success.
Yeah. I agree. I don't have the specific stats on it either, and like I've mostly read from it anecdotally or from other people's studies in other books, like O'Neill's and Minervini's and what have you. But well, from own personal experience, like when I see a sector setting up, like yeah, well, why don't I pull up MarketSmith? MarketSmith tends to be uh, one of the better ways to look at this stuff here. I'll bring this down and share the screen again. So for something like this, right? Like Upstart or like your AFRM, to see like, well, this is having a great move. It's following through today, heavy volume. What's its group look like? Right. And then like you could start to see that like the group is still kind of consolidating here. Oh, well, what's another one? Like CIX was one of the ones from this weekend where it was consolidating, and there was like this descending trend line over here, and little shakeout on last week. But when we look at the energy and coal group, you can see that the group is leading as well. So the point that I'm trying to make is when we see a number of stocks setting up and we're seeing if we take a look at the group and start to see like how the group is evolving as well, then we could look to focus on the leaders within that group, and there'll often be opportunities.
Yeah, absolutely.
I'd like to open it up to the audience too. If you guys have questions that you like to ask, that you've been here, you've been watching along, let us know what questions you have. Go ahead, type it into the chat. See, we have a bunch of people joining us live, so yeah, let us know what questions you have, or let us know too where you're logged in from. We're streaming live not just to YouTube but to Facebook and to Twitter as well.
Yeah, I can share another view of sectors if you want, Mike.
Yeah, let's take a look at it. This is now we're getting into some of what you share inside the Elite program.
Yeah, yeah. So this is what we call RRG analysis, and this is specific to stock charts, and a gentleman called Julius de Kempeneer that created this technique. A gentleman from the Netherlands, and he does a kind of weekly show as well. And I think sometimes they're on YouTube or whatever. But essentially, what this is it shows you how sectors move around and come in and out of favor. And it's let me just center this. So essentially, you have a graph here, and the vertical axis is the relative strength momentum. So how fast is its relative strength either increasing as it moves up the chart or decreasing as it moves down. And so we've got momentum coming up here, and the actual ratio of the relative strength is along this kind of horizontal axis. And what you'll see is stocks tend to move in a circular direction. If I follow my cursor around there, and this takes all the key sectors. It uses the Spider ETFs for this particular one. I tend to benchmark it, and the benchmark is the thing in the center. So that's what is relative against whatever benchmark you're using it. So that's using SPY at the moment. I use an ETF called VTI. VTI is the entire market. This is a very, SPY is very weighted to large caps and mega caps and things, whereas VTI is it kind of equally weighted across the whole spectrum. And what you would see if I played this back, did an animate on this, you'll see that sectors all move around, and they move, relative to the overall market, but they move in this clockwise spiraling direction. So as they're moving up from this laggard's position here, generally what happens is the momentum increases and then the relative strength increases compared to your benchmark. And when they make this turn up is generally when the setups start to appear within those sectors. And you can see down here that where you should be finding setups this week. Energy, which is positive, and finances is number 2. That's where you should be seeing setups this week. And those setups are good, and as long as that ETF follows this line until leading, and then when it starts to dip down, like if I went back a couple of weeks or whatever in time, can you grab this a little bit? Go back. That's end of August. We had technology and we had healthcare just starting to show a dip.
How heavily does this play into which stocks you're going to select?
What it does is I don't let it affect my setups in any way. So I still look through my setups, and when I see a good one, but if I've got 3 or 4 setups that I'm looking at and they're all a sort of even weight, then I will choose the things that have got the positive momentum for them rather than starting to dip.
Mm.
So there's two reasons to use this. One is when you're in trades or you're managing a trade in a position and it's in one of the sectors that's now starting to turn down. And if I move that forward a week, you can see that starts really coming off the boil, not much going on there. And then we can see them dip right down and they're now weakening. It's a bit of an advanced warning system as to what's actually happening. But that's where I start to tighten up my management and looking. This is about roughly where you're going to exit as they start to turn down, and the ones that are turning up are the ones where you start to look for new opportunities.
Great
So,
stuff.
but that's a bit more advanced technique, Mike, as you know. But that's
Hmm.
and I do relative rotations of relative rotations, as you know, and further narrowing it down to very specific stocks within very specific groups in sectors using that technique.
That's why I love talking to you. I always learn something new whenever we chat. Oh, we actually have a question that came in from the audience. Confluence Trader breaking the ice for us. Asked the question: can we rely on hot sectors when the benchmark index is bearish?
Yes, and in short, yes. Um, it's not often that everything in a market goes down. I mean, it does happen, but there's always contrarian stocks and contrarian sectors and contrarian indexes because people are trying to rotate their money around into where that money is still working positively for them. There will be net outflows and net inflows of money into the markets, and the outflows may be out of stocks into bonds, out of stocks into commodities and whatever. But they also have an effect on stocks within the market, and I think that's why we're seeing banks and regional banks coming up, because there's money is moving out of the more risky stocks into some of the more defensive stocks, but also into other asset classes which are still within the bank's territories. So they'll see net inflows, which props up their balance sheet and their profits and their lending and so on. So it's all cyclical. Commodity stocks are a good example. Also, if you start looking at things that are maybe crypto related, I think we talked about that the other day, Mike.
Yep.
Bitcoin's been on a bit of a tear, and you just need to look at some of those directly correlated crypto stocks, and you'll see them zooming higher. SI, Silvergate Bank, is one, and it's got the joy of both being a financial stock and also directly crypto related, and that has made a 40% move in 4 days. I don't know if you've got the chart of that,
Yeah.
Mike. Yeah.
Yeah, not bad.
Yeah.
Oh no, it's just 1, 2, 3, 4, 5, 6. Hey, yeah, it's a much slower mover than that. It took 6 days to get to 46%. So if you're willing to sit around and wait for 6 days, you might have had a decent move there.
Yeah. So the question is, that the hot stocks, even when indexes are turning down or are wholly bearish, there's generally something going the other way.
Mhm.
I mean, no, there won't be many of them, but they are there.
Indeed. All right. So with all that, we're already out of time. Yeah, this is a half an hour live stream, and we're already a few minutes over already. So Stu, thanks so much for coming in and joining us. That was a real treat.
No, you're very welcome, and hope it's of use to some traders out there who may be listening.
Yeah, absolutely. This live stream, we only started doing a regular live stream. I think it was last week. Doing it more frequently, and it's gaining traction already. Like there's already like 3 or 4 more times people joining live, and it's only going to get bigger and better from here. So look forward to doing this. Uh, Thanks again, Stu, for being a part of it. Thanks so much again
Welcome.
for being one of the coaches over at inside the elite program. And thank you everybody for joining us live. We'll see you again on Tuesday. Tuesday we've got Jim Ropel joining us, hedge fund manager. He's been on the show a few times already. Tune in at 4 o'clock on Tuesday, and we'll see you there.
Okay.
Right.
Bye.
Take care, everybody. Much love. Peace out.